So if you're looking to set up a 0% tax company, or what we call a tax neutral company, where the country where this company is registered does not tax that company, obviously have a lot of great options out there. You have the Hong Kong company, which is perhaps the most popular option, at least historically. You have the US LLC, and then obviously you have the UAE, specifically if you are below the small business threshold. And those are going to be the most common options if you're looking for a zero tax company. But in this video, I'd like to add one more company to your consideration if you're looking for a zero tax company that is perhaps lesser known for this purpose, and that is the Singapore company. Obviously, I've talked about the Singapore company in a bunch of videos on this channel, and I've mainly been of the opinion that the main purpose of using a Singapore company over one of these other structures in most cases is because the Singapore company allows you to relocate to Singapore, because you can get an employment pass for yourself as director using this company. Whereas if you're just looking for a tax neutral company that you run outside of Singapore, there are probably better options out there. But in this video, I just wanted to cover a little known way, actually two ways in which the Singapore company can actually be used as a zero tax company in certain cases. But it is a bit more nuanced and a bit more tricky than in some of these other examples. So in this video, I'm going to cover step by step how you can in fact use the Singapore company to pay 0% taxes on all of your income, at least 0% obviously in Singapore, because obviously in every single case when you set up a company, where you actually manage and control that company from is most likely going to tax that company. So you always need to keep that in mind. Before we get into the details, whenever you want to set up a Singapore company, you're going to run into two problems. The first problem is that as a foreigner, you're not actually able to do this on your own with the government. You actually have to find a service provider to do this for you, which often is going to add a bunch of fees and things like that, which might be undesirable. And the second problem is that there's a lot of things that you need attached to your Singapore company other than just incorporating it. For example, you're going to obviously need an accountant, like with most companies, and you're also going to need what's called a corporate secretary, because all the Singapore companies need to have that. And on top of this, you need to have a local director with every Singapore company. So if you're already not a resident of Singapore, you're going to need to find someone to essentially act as what's called a nominee director from somewhere. So to solve these two problems, luckily there is a service provider out there called Awesome, who I partner with on this channel, who essentially provide you all of these things that you need with the Singapore company in one place. They provide you your secretary, your nominee director, your accountant, and they can even help you apply for the employment pass for yourself as director if you are looking to use this for that purpose. And also on top of that, if you do the math and you add up the costs of all of these different things, like the secretaries, the nominee director, the company address that they provide, plus the government fees to actually set up this company, the service fee on top of that is extremely small. And I actually did this math in a previous video if you don't believe me, so you're gonna go look at that if you want. So if you are looking to set up a Singapore company yourself, it makes a lot of sense to use Awesome to do that. And also on top of all of this, if you use my link down below in the description, you get 16% off on all of their packages. So if you're interested in that, go check that out in the first link down below in the description. With that, why might we set up a Singapore company? Why might we not just set up a Hong Kong company, for example, or a UAE company if you're looking to set up a zero tax company? So obviously this is going to be case by case. It always depends on your situation. And I would say in a lot of cases, it does actually make sense to look at those other options because of some of the details that we'll cover in a moment. But one reason might be that Singapore simply is one of the freest economies in the world. It simply is a very business-friendly jurisdiction. In some cases, let's say you have a VC-funded startup, let's say you want to apply for like Y Combinator or something like that, they will only accept companies that are incorporated in very few countries. From the top of my head, when I was applying for it one time with a startup that I had a while ago, they would only accept US-based companies, specifically a Delaware C corporation, as well as a Cayman Islands company and a Singapore company, because for various legal reasons, I don't know all the details, they're only willing to invest into companies registered in one of these regions. So that might be one reason why you just should have a Singapore company, unless you want to set up a US company and pay US taxes and all the filings there and everything like that. And in general, it can just give your company a lot of legitimacy by being registered in Singapore. It's a well-known business hub. Also, when you compare it to, for example, the Hong Kong company is going to have the requirement that you need to do an annual audit for that company, which is going to add a lot of compliance and hassle. Whereas with the Singapore company, you're not going to have to do that. And generally the filings and everything are very smooth, very efficient in Singapore. So it can be an easier structure to maintain. And obviously with this company as well, you're going to get the optionality to potentially move to Singapore in the future, which you cannot do unless you have a Singapore registered company. So let's say you think that you don't want to move to Singapore right now, but you might want to do that in like a year or 2 years. Then if you decide to do that in the future, you can just apply for that employment pass for yourself, buy this company. It's already ready. You don't need to change your corporate structure, and that makes it much easier. So then the question is, how can you pay zero taxes with this Singapore company? So in general, Singapore has a territorial tax system. And in general, what a territorial tax system means is that the country will not tax income that is sourced outside of that country. There's many countries like this in Asia. Thailand is like this. Well, they have kind of a remittance system. Malaysia, there's many other countries like this. But there's one peculiarity with the Singapore's territorial tax system, which is that for companies, any income, even if it is foreign income, if that income is brought into Singapore, it is still going to be taxed in Singapore. So really, it's more like a remittance tax system rather than a pure territorial tax system. And it is because of this one nuance that it often makes it so that even Singapore companies that are not managed and controlled from Singapore and therefore are not tax residents in Singapore, because that is how tax residence of companies is determined in Singapore, those companies will still be taxed on all of their income in Singapore, because most likely with a Singapore company, you're going to have a Singapore bank account. But there are two ways that you can essentially legally get around this. So obviously none of this is going to work if you actually want to live in Singapore as the director, if you actually want to manage it from there. This only applies if you are not managing this from Singapore and it has basically nothing to do with Singapore. So the first way is to not have a Singapore bank account. And this is going to be the general way. If you have like an operating company, if you have a bank account for your Singapore registered company where that bank account is not based in Singapore and any income of that company is paid into that non-Singapore bank account, then this money is not going to be remitted into Singapore. And it's specifically stated in the law that any income that is received in a Singapore bank account is treated as remitted into Singapore. So if you find a way to open a non-Singapore bank account for the Singapore company to potentially, this video is obviously not tax advice, I'm not a tax advisor, this is just my understanding of the law. This can potentially allow you to run this company entirely tax-free, although obviously again you need to consider the taxation from the country where you actually run this. One example is to use a Wise account, because the way Wise works behind the scenes is that they have bank accounts in different countries for all the currencies that you can hold there. So for example, if you have a Wise account for your Singapore company, but you hold US dollars there, the US dollars are actually held in a US bank, which is outside of Singapore. If you hold Singapore dollars there, those Singapore dollars will be held in a Singapore bank account behind the scenes, so that will not apply. But if you just don't hold Singapore dollars, that can potentially allow you to not have to pay taxes on income that is paid directly in those foreign currencies into the Singapore company's Wise account. Outside of this, there are banks out there that will open bank accounts for foreign companies, but it is going to be more difficult to open those. They're not going to open it just for anyone. You might have to prove that you have some connection to those countries. You might have to put in the minimum deposits, things like that, and they might not advertise it. So this is why I'm saying that this is more challenging. And unless you have a case where you are able to get one of these bank accounts or perhaps just use a Wise account or something like that, then this is going to be more difficult to make work, but it can be done. The second way to not have to pay taxes on a Singapore company is by having a foreign-owned investment holding company. I'll talk about this in more detail in future videos because this warrants a whole video, but we can see directly here from the government website is that foreign-owned investment holding companies with purely passive sources of income and or receiving only foreign-sourced income are generally not considered tax residents of Singapore, because these companies usually act on the instructions of its foreign companies / shareholders. So let's say you're looking to set up a company to just hold your investments where the investment income is coming from abroad as dividends from investment holdings and it is entirely passive, then that income will not be taxable in Singapore, again, unless you actually manage and control this from Singapore. So those are the two ways. And in a future video, which I'm going to link right here, I'm going to cover this foreign investment holding company, how to set this up, why this is beneficial. And if you're looking to understand in more detail the tax system of Singapore, what income is taxed on both the personal and the corporate level, how to reduce your taxes as much as possible, you can watch this video right here. So watch one of these videos next, and we'll see you in the next one.